You've probably heard the term sniper entries over a million times. Yet for some reason, not a single trader is able to make them live. Oh, I have the best sniper entries all. With this video, you'll have the best sniper entries. Yet you watch them trade live and they can't get it. You watch their executions and it doesn't make any sense, right? Let me be completely honest with you. Sniper entries are simply trades where your system plays out and you get minimal drawdown. Can you get them consistently? Probably not. Can professional traders get sniper entries consistently? Probably not. And if they do, it's with a very low win rate, right? Nobody's getting 90% win rate, sniper entries, no drawdown. Wait, they are. It's the scammers that are trying to sell you a BS course for $100, trying to get them to use their broker and everything else, right? Let's actually debunk the myth behind sniper entries, what they are, and how you can actually get good entries on your system, right? I'm not here to tell you I'm gonna teach you perfect entries. I can't, probably nobody can. What I'm here to teach you is how you can refine your system to get the best possible entries, and of course, raise your expected value, which is what matters, right? The Calmer ratio, the expected value, those are the only two metrics you should be focusing on. If you're still looking at your win rate and all those things, you need to upgrade your data, go professional. So let's look at what sniper entries actually are and how you can use them within your system with whatever strategy you have. It all works the same way. So let's dive straight into it. The first thing you're gonna need if you want sniper entries or entries with minimal drawdown is gonna be trading with the trend and trading with momentum. Why? If you're trading within a consolidation or you're trading against the trend, odds are the trade is gonna go against you. I'm not saying you're gonna get stopped out, although you probably are. But what I'm saying is, hey, if you're trading with momentum, right? Let's say you're taking buys. Well, you don't want to be taking buys as price is going down because odds are you're going to go into some drawdown. And odds are you might get stopped out unnecessarily and still have your trade idea play out. So if you're getting on buys, you want to make sure that the higher time frame trend is bullish, right? Look at the structure, look at the draw and liquidity, look at the candle development, right? We're going to get into that later. But also you got to make sure that, hey, is it a right time to get in? If you see that, hey, we're in bullish structure, we are about to break some new highs, we just rejected a low, and you have your confluences, whether it's Fibonacci, the golden pocket, book map, ICT, fair value gap, whatever it is, right? Well, if price is going up after a rejection, odds are it's going to continue going up towards those highs. So instead of trying to time the perfect entry at the cockroach encroachment or whatever it is, wait for the rejection, and once it's confirmed, then you can take the trade and minimize your drawdown. That's the first thing you need to focus on to get sniper entries, right? And again, it's just going to be as simple as understand the higher time frame trend, understand what stage of delivery the market is in, right? Are we accumulating, expanding, manipulating? And lastly, what is the 4-hour candle and the 1-hour candle doing, right? If we see that the 1-hour candle is breaking out, we're getting momentum, we got power of 3, you got liquidity, or whatever it is, right? Then you know that there's high probability for momentum, right? Not all times have high momentum probability, right? Let's say you trade in Q. Super simple question. At what time are you more likely to get proper momentum? At 7 a.m. or at 9:45 a.m.? Well, 9:45 because the market is open, we're getting close to 10 a.m. So also make sure that you're trading at a time where momentum is likely. Why? Because if you have the trend and if you have momentum, odds are the trade is going to go straight into your favor. I'm not going to say you're going to win it, right? It all depends on the trade and whatever it is. What I'm saying is the chances of you going into drawdown are less. Therefore, sniper entry. Now, another important part to getting sniper entries is you want to make sure that you have a proper draw on liquidity. And I'm not talking about drawing a random line on a chart. Oh, this is the ultra intraday high low, whatever it is, right? Oh, this is a semi-London low. This is actually the iron, like, no, okay? You want to have proper liquidity, right? There's really great tools like the book map back here, my baby. You can use a dome. You can use gamma levels. There's a lot of ways to see actual liquidity on the charts. And if price is headed towards that liquidity is going to act like a really strong magnet. And again, you're going to see sometimes price bursts into news, right? The reason news bursts is it seeks liquidity immediately. And also you get some really big like Drake candles, right? What happens is price is seeking liquidity quickly. Therefore, if you position yourself in a way where you, again, it's not going to be 100%, but if you kind of understand where the draw on liquidity is and you're trading with momentum, the idea is going to be, hey, price should go towards this liquidity with speed because it is seeking more volume, right? It is seeking to move more. Therefore, if you understand where the liquidity is, well, more likely than not, the move is going to have that momentum and price is not going to be rejecting or going against it. Why? Because it's actively seeking that liquidity. Let's say we're taking sells into a level with buys right under price, right? 100-point move, for example. Well, if price is actively running towards that price and that price is pulling price down with a magnet, right? That level is just pulling price. It's holding it here by the ball, but it's pulling it down. Then what are the odds that price starts going against it when there's a massive magnet pulling it under? Unlikely. Therefore, if you want to trade with less drawdown, trade with liquidity. But let's head into the third step. Now, before the third step, you need to make sure that you're trading somewhere that actually makes sense, right? That your strategy, you can play it out, that they're not having hidden rules, that they're not having hidden payouts, that they're not, a firm that's actually working with traders and paying out their traders. That's why I've decided to promote Chronos Funding. And actually not only promote it, but I decided to start the firm and build it from the ground up with a team that's veteran in the prop firm industry. At Chronos, you're able to trade with, again, no consistency on the eval. You can go at it. We don't want traders spending a lot of time on evals. We want to treat funded traders. And in just under 4 payouts, you're actually able to get moved to a live account. Doesn't get better than that, right? Now, to get into step number 3, we're gonna have to analyze the structure, right? Another really important thing to not get any drawdown is to not be trading within a consolidation or not go against the structure, right? Just because the 30-second chart gave you an IFEG doesn't mean that the market is going to go down, right? What you want to do and what you want to focus on is, hey, are we consistently creating new highs? Are we consistently creating new lows? Why? Because by positioning yourself in a place where you can actually understand where the structure is and what it is, odds are, if we have bullish structure, it's going to continue being bullish, right? This is a market theory that has been around since like the 50s, 60s. I don't know, bro. It's been around for a while. And every single methodology uses it, right? Basic market structure. So if you want less drawdown on your entries, number 1, learn structure. It's not that complicated. Just understand the mechanics, understand swing highs, swing lows. And then of course the fractality of structure, right? If on the 1 hour we're bullish, then how does the 5 minute have to look? Okay, when this happens on the 5 minute, what happens to the 1 hour, right? Just understand the correlation between time frames and position yourself accordingly, right? If we know the structure that we're going higher and you see that we fail to break a low and then reject, that's your kind of tell to be like, okay, well, this might be the moment where price continues shifting to the upside. If that's true, then this is the chance where I get the minimal drawdown on my trade and I get an opportunity to maximize the trade while getting a sniper entry. It might go into drawdown, might reject again. It is what it is, right? But you're positioning yourself in a position where it is more likely than not just gonna continue moving with the structure. Every trader, again, if it gets choppy, right? You take a sell, price goes up and you're like, oh, it has to be bullish, right? If I was wrong on sells, it needs to be buys. There's no ways I was wrong. Well, guess what? You're wrong. It's gonna continue chopping. So make sure you're trading with very clear structure. Again, stupid obvious. Most of the times, again, at least right now, I'm filming this May 28th, 2025. And again, the market open has been a bit choppy lately. So wait until 9:45. Wait until 10 a.m. Again, with my mentees, some of them were struggling trading the 9:30 open. And I told them, right, Colby, Anthony, Francisco, I told the 3 of them, dudes, start trading after 9:45. Colby's already funded 5 accounts. Anthony's on his way to be funded. Francisco's almost funded now, and they were struggling for over like 6 to 7 months. So it just shows, right, how trading with clarity is easier. And again, they're getting less drawdown, so it's easier on their mental capital. And if you want to learn about mental capital and how you can optimize it, you can click the link below and join the free WAP that I have. Why? Because we teach you everything from data gathering, mental capital, and what you need to be a professional trader. Not these things like, oh, just go to the gym and don't jerk off. Like, there's a lot more into it that goes on behind the scenes that most traders never even find out about, which is why they remain unprofitable. So click the link below, join the free WAP, and you'll learn about how to actually maximize those things for your trading. Again, so you know how to take sniper entries, and just to finalize it, right? It doesn't mean just because you get a sniper entry, all your trades are gonna be like that, right? You need to understand your Kalmar ratio. On the monthly basis, it's how much you lose versus how much you win, right? Why? Because if you understand your Kalmar ratio and your returns, you're not gonna be focused on sniper entries. You're gonna be focused on system entries. If you understand your expected value, you're not gonna be focused on the sniper entry. You're gonna be focused on getting the best possible trade. Why? You should not focus into how much drawdown you get overall, right? If you do, there's a lot of stuff you can do, like, again, journal, track your data, right? If you see that every single one of your trades goes at least 1/3 into the drawdown, guess what? Stop taking your trades right off the bat, wait until it goes into drawdown, and then take the freaking trade. Why? Because if all the trades are going into drawdown, you might as well wait a bit, take the trade while you're in drawdown, and magically you got better entries, right? But it's not the end of the world if you don't get sniper entries. I personally get a sniper entry 1 out of every like 5 or 6 trades. So not even that much. And when I do, cool. When I don't, cool. Why, guys? Again, you need to stop focusing on the little nuances that don't really contribute to your trading, right? Again, maybe improving your drawdown levels is gonna work, yes, but you don't need sniper entries to be profitable. You don't need the perfect strategy to be profitable. You know what you need? You need data that's gonna fortify your psychology, that's gonna help you be profitable. It's really not that complicated. Get your data, get your strategy, journal. Again, if you're going into too much drawdown, well then maybe start, again, grab a Fibonacci tool. This is sauce. If you stayed into 10 minutes into the video, I'm putting you on sauce. Grab the Fibonacci tool and divide it into 0.3, and 0.6, right? You're gonna get 3 quartiles. Well, it's not quartiles because quartiles is 4, but you get the point, right? You're gonna get 3 different lines, And then you're gonna measure it, right? You're gonna go from your stop loss to your entry. And then it's gonna show 0.3, 0.6, right? And what you're gonna do is, if you see that your trades go into the 0.3, that's 1/3. If they go into the 0.6, that's 2/3. If they go into the, the last one, that's 3/3, or the full drawdown, right? So what you're gonna do is you're gonna measure all your trades and you're gonna see how much into drawdown they go. If you see that all of your trades are going into the first third, guess what? You're now able to say, hey, instead of taking my trade regularly, let me put my entry, put my fib with my stop, and then once it reaches the first third, then I can take my trade. If all your trades are going into the second third, you do the same thing. And if it's just some here and there, then you can see what type of setups give you more drawdown, what types of setups gives you less drawdown, and adapt based on that. Again, guys, you want to be successful in trading? Look at the successful people. I'm not talking about the guru who posted a $500 payout. I'm talking about the Wall Street guys. Why is Wall Street so good? Because they have the best data gathering system. They're quant traders. All they do is they look at data, they run their algos to optimize data, and then they put the data to work. Why are you not doing the same thing, right? So appreciate you guys watching this video. I really hope it helped. If you have any questions, just shoot me a DM on Instagram or on WAP, right? And again, we have the WAP down below. And then we're also gonna have the prop firm discount, right? Use code Emilio right now in Chronos to get 50% off. Pretty good firm. Again, we have 4 payouts and then you go live. And then on top of that, if you wanna learn how to use tools like the book map, just click the link below. You get 3 months for the price of 1.5, which is pretty freaking solid. So I appreciate you guys watching the video. Make sure to like and subscribe and whatever else you're supposed to do. But not generally, you guys, again, appreciate you watching this. I really hope I helped you. And if I didn't, then watch other videos. I'm probably sure I can help you somehow. Bye-bye.